Hello traders, Corey Mitchell here with your swing trading stock market outlook for the week of November 27th. If you are in the US, I hope you had a great Thanksgiving and Black Friday. Black Friday sales still going on this website. All the trading courses are 20% off. Just punch in code Black Friday 23 on tradethatswing.com. And overall, market conditions still looking really good. I do this same process each week just to decide how aggressively I'm going to be deploying capital. And we look at how the indices are performing, market health indicators, how the actual trades and stocks that I'm looking at perform, and finally just, where some pockets of stocks are performing really well. So that's sector performance. And this is the first step in an overall process which looks at how are market conditions. If market conditions are good or bad, we can decide if we want to go long or short, and then we look for specific patterns and specific trade triggers in those stocks that we have isolated as strong, which we'd be doing right now. When the market's strong or weak, we'd be looking for some potential short trades. So right now, market's strong. We are looking for strong stocks. We want to see nice patterns develop. So whatever your strategy is, or I have, of course, some strategies that I look at, we'll talk about what those are, and then actually waiting for those trade setups to occur. So heading into the week of November 27th, conditions are good. I am deploying capital on long trades. What am I deploying in? Well, you can check out a few of these lists. So the best swing trading stocks list for November doesn't have actual trade setups. It's just a list of stocks that have been very strong recently. There's two lists, one very strong, one very weak. I ignore the weak one when the market is strong like it is right now. So we're focusing on the strong list, and then you have to wait for setups to appear in those stocks. And then I also have a current stock watch list, which is simply stocks that are forming setups or are very close to forming the setups that I watch for right now. So a little bit more timely. But these are some other ones that you maybe want to keep on the radar because they've been really strong, and if they form a nice setup, you might want to watch. So covering a couple different avenues of potential trades there. You can also, if you're more into ETFs, you can check out the best performing ETFs or the best performing stocks. Might get some ideas there. Again, these would be for different styles of trading. I mostly look at these top two for swing trading. And these are more, and then these ones here for more investment type, longer term trades. Buy the dip stock list, buy and hold stock list, and long term dividends, which when the market's doing good, we might also want to consider some of those as well. So the first step we're going to look at here is how the indices themselves are doing. I have a few extra up here because they are just interesting in the moment, but mainly we look at the technology stocks, the large cap US stocks, the NYSE because it covers a wide array of stocks, different sizes, different volumes, different industries. Very good overall view of kind of what the average stock is doing, you could say. And the Russell 2000 looks at smaller companies. Then we also have the TSX. So those are these four. Then we have the TSX. Then I also have Bitcoin, gold, and silver up here. So let's just go through these and see what's going on. So the Nasdaq, the S&P 500, the Russell 2000, and the NYSE Composite are main U.S. indexes that I look at, all in at least short-term uptrends. And that just means they've made higher swing highs and in most of these cases higher swing lows as well. You can see I've drawn these lines. They were dropping, right? We have these lower highs. Let's just look at the Nasdaq here. This high is lower than this one. This high was lower than the previous one. And then that changes kind of early November where we start to get this move above a prior high. That is a change, a shift in what was happening. And downtrends are lower swing lows, lower swing highs. So as soon as we have that higher swing high, you can no longer have a confirmed downtrend. You have something going on there that says no, it no longer follows the rules. And so now we're more in this higher high, which is an element of an uptrend. So an uptrend's higher highs, higher lows. And so to me, we're in an uptrend right now. I don't have to get too complex on looking way further back. For swing trading, kind of looking at the last several months, we are in an uptrend. And for swing trades are lasting a few days to a few weeks, maybe occasionally want to last a month or two. So we don't need to look at too much data and get too complex. Just looking at this, we're in an uptrend right now. So no reason to fight it, or I'm deploying capital on the long side. Canadian index, same thing. You can see it was a little more choppy. We had these break below the range and then this big surge back in, and we have been making higher highs and a higher low here. Bitcoin, big surge out of this range it had been in. This is a 2-day chart just because to cover about the same amount of time going back to March-ish. Since it trades on weekends as well, you're going to have more days on the daily chart, so I just condensed it down to 2 so we can see a little bit more time. And just to show this big range which we broke out of, and it's still hanging out right near the high. Of course, we'd want to see this breakout. One thing that's a little interesting to me, and I'm kind of aware of, I do own Bitcoin. Basically, it had this big rounded bottom pattern back here. It doesn't quite show on the chart, so I was buying it way back here. And yeah, held it through the range, and now kind of watching this. We had this consolidation and then this break, and then it consolidated right again. That can sometimes be a continuation pattern if it continues, but if we start breaking down, maybe this is going to be a little bit longer pullback or something. So I am aware of that, kind of watching my positions and seeing how this plays out. Let's look at golds. This is a weekly chart, really condensed. You can see it's showing more than a decade of price action. So this is a really long-term pattern, and any of you who have taken my swing trading course might recognize this pattern as a massive cup and handle. And we had multi-year bottoming process. We had this big decline, multi-year bottoming process here. We have rallied back, and now we've had a multi-year cup forming. This is a very big pattern, could result in a generational type large move. We'll see. The problem with these big patterns is that you don't want to be too early to them, because this could keep chopping sideways for another year, and in terms of the whole pattern, that actually wouldn't change it too much. You just have a little bit extra over here, and so we don't want to rush into this. If it starts to run, I think there'll be plenty of time to get in, probably multi-year bull market. I do have, let me pull up a little bit bigger chart. And I'm going to show you kind of what this mostly reminds me of. So it's not exactly the same, but we had this big multi-year bottoming process here. Back in the late 90s, we had a multi-year bottoming process here. Then a pretty strong rally up to the prior highs, and then this kind of long period of a little bit choppy trading. Again, it's not exactly the same, but you have from like 03 out till about 05, where kind of for 2 years, you had a little bit of a rally in here, but it was mostly pretty sideways. And that's kind of what's been going on here. You have, since like 2020 into 2023, we've just been chopping sideways. We've had a couple rallies, a couple drops, but not much of a move. And then you start this, what we could call basically a generational move in gold. And I call it generational because, a lot of people, you might only see a huge rally like this once, maybe twice in your life if you're trading for 20, 30, 40 years. And this resulted in a massive run for gold. We have not had really many of those other than the 70s, the 90s. Maybe we get one now. So these are kind of about 20 years apart. You have from the late 70s, let's call it 80, to about 2000 when this one started, and now you're in 2020. So about 20 years later, maybe we get one of these big moves again. I don't know if it's going to happen. I'm just saying this looks a little bit to me like, multi-year bottoming process, similar to this. And some of these other ones had the same thing, but they didn't end up breaking higher. So that's the ultimate catalyst, is we need to start running up into this, at least kind of 2,300, 2,400 range. And like I said, if this kind of movement unfolds, there'll be plenty of time to get in. I prefer trading the actual stocks as opposed to gold itself. Yes, gold may have a move. If we're talking about if we're here kind of in the cycle, gold ran 300% last time. Again, I do not know if that's going to happen. It's just a scenario that could play out. I would watch GDX, the Van Eck Gold Miners, GDX J, the Junior Gold Miners, and SIL is silver. We haven't really talked about silver yet, but silver is the gold miners. I like to watch those. When those tend to get strong, they can sometimes lead gold. They tell a bit of the story of how healthy the market is. If we pull up GDX right now, pretty weak. Right, not quite as strong as gold. We're hanging out here near the lows. So I would want to see the miners, at least for how I trade, I want to see these miners get stronger before I'd really start getting interested in gold. Because if gold keeps going up, maybe there's some profit there on longer term trades. Gold did have a big run, 300%, but that's over multiple years. Whereas some of these gold mining stocks and even the ETFs can have really huge runs. Coming out of COVID bottom, GDX, ran up 150%. Not huge, but we can have some of these really big runs in the miners. And then you can also look at some of the individual stocks. So some of the names that you like, the ones that are really strong, they can move thousands of percent if this, we start to get one of these big runs. So it's just something, that's kind of in the back of my mind. I'm not doing anything with it yet, but to me that is interesting, this setup that is forming there. Silver weaker as well. Silver also tends to be a little bit more volatile than gold. And I think if gold breaks out, even though silver is weaker at the moment, it will likely start to accelerate and potentially have more gains once the rally gets going. Again, something I'm not doing anything with right now, but it's kind of in the back of my mind that over the next while, this is something to keep an eye on. And we don't really have to change too much in our routine because, as we'll discuss later when we look at the sectors, if the gold stocks and the silver stocks really start to take off, they will show up here in our sectors. And you'll also start to see them on your scan list. If a stock's really strong, it's going to show up on our scan list. So until that starts to happening, I'm not too concerned about it, but it is just something to be aware of, that this big pattern is playing out. I'm not jumping in yet because, like I said, this could jump along, go for sideways a long time, or it could break lower. So I'm not anticipating that this is going to happen. Just in the back of my mind, I'm thinking if this does happen, we could have a pretty big move in the commodities or in the metals here. So just something to keep an eye on. The basic write-up of what I talked about is all here. Let's get back to the stock market, and this is the S&P 500 index along with what I call market health indicators. These look at the underlying elements of how strong the stock market is, which sometimes the indices don't always give us this information. For example, the S&P could be really strong, but the health indicators are really weak, indicating that pretty much maybe only those big cap stocks are performing well while everything else is doing pretty crappy. So if you're swing trading, you might notice that in your results where the one index looks really good, but you keep taking loss after loss and you can't quite figure out why. And it's because the stocks you're trading might be not really reflective, or the indices or index you're watching might not be reflective of the actual stocks you're trading. So this gives us a sense of kind of overall market health. So this, as we talked about price action really good on the S&P 500. This shows how many stocks are above their 50-day moving average. 50-day moving average, just a very crude measure of whether a stock is in an uptrend or a downtrend. And 76% of S&P 500 stocks are above their 50-day moving average. 66% are above, of all U.S. stocks are above their 50-day moving average. Above 50 is good. You generally see when we're below 50, we get more of these downtrending periods or really choppy periods. So I like to be really active on the long side when this indicator is above 50. And you're tending to trade during periods like this, or recently, the last week, where we're running really strong to the upside. Back here, once we moved above, nice run to the upside. Once we start dropping below, you're into more choppy-ish. Yeah, just a good kind of confirming indicator, lets you know how most stocks out there are doing, not just a single index. Volume, not super important to me at the moment. This is the rate of change, or the percentage movement of the S&P 500 per day. And you can see back here during the decline of 2022, lots of days with greater than 2% drops. So very volatile trading. Uptrends are boring. They are low movement, very complacent, and that's what we're seeing. We just see a lot less volatility, daily movement volatility, compared to back here. We have had no 2% drops in a single day going back all the way to March. And even they were a little bit smaller than they were before. So once this kind of uptrend started, and especially once we kind of cleared, this choppy area, it's been much more calm, more reminiscent of an uptrend, even during this decline. So this indicator kind of helped tell us that this was more likely a pullback as opposed to a major downtrend like what we saw in 2020. Because in major downtrends, you see these big moves to the downside. People want to get out there scared. This more just, people not as scared, people not as eager to get out or to sell their stuff. It drops a little bit each day, more tame selling, as opposed to back here, it's pretty much all out panic. So very different contexts on this pullback versus a sell-off or a big decline. And yeah, we're hanging out. We haven't had any of the big 2% drops. So to me, this still just spells that we are in an uptrend. This is the NYSE advanced decline line, the number of advancing stocks each day minus declining stocks as a cumulative number. We had kind of stalled out a little bit here, even though the S&P 500 was strong, but we have started to make some new highs above the equivalent of these levels on the S&P 500. So we are making higher swing highs, higher swing lows, a little bit more muted than what we're seeing in the S&P 500, but still it's confirming what the indices are doing. If this was going down, the NYSE advanced decline line, while the indices are going up, that shows weakness. So those are kind of the divergences we're looking for. Or if the S&P 500 is going down and this is going up, making higher swing highs, higher swing lows, that indicates we're usually near a bottom and likely to turn higher. Right now, it's just basically confirming what we're seeing in the index, moving up. This is up volume divided by total volume. It gives a sense of how much enthusiasm or selling panic is coming into the market. So up volume, this is showing, up volume divided by total volume. So we're only looking for really high numbers or really low numbers. And back in, when was it? So early November, we had, right there, 80% upside days. That means 80% of the volume in all stocks occurred in stocks that moved to the upside that day. So 80% of the volume was in stocks that moved up on the day. Very powerful indicator. So that was 80% 2 days in a row, or 80% or more. And then around mid-November, we had a 90% upside day. Very strong enthusiasm. 90% of the volume that occurred that day occurred in stocks moving higher. Huge enthusiasm in terms of buying interest. So we don't get those signals very often. Yeah, you can see they get close, but we do not hit those back-to-back 80% days or 90% days very often. Nice indication of strong enthusiasm coming in right near lows. This one came in, right near the bottom, and then we had this other one kind of on near this breakout area. So really nice confirmation there. Sectors on the move. Main sectors to watch that are kind of performing well over all of these time frames. Technology was a little weak over this one, but it's the top performer over the last month and 3 months. Financial hanging out near the top over the last week, near the top over the last month, and near the top over the last 3 months. So those are kind of ones that have been performing well. Same with consumer cyclical, near the top here, near the top here, and near the top here. So overall, 3 time frames. Last week, energy and healthcare were the weakest. So they've had kind of a bounce out of weakness. So it'll be interesting to see if they continue. But overall, if you look at this chart, you can pretty much say everything's doing pretty well, especially over the last week, over the last month. Energy, the only one that's a little bit weaker over the last month, losing a bit of ground. But everything else, very strong. I don't really care about consumer defensive and utilities. So if you look at pretty much all these other sectors, moving very well over the last week as well. Everything pretty much positive. And so that's good. It means kind of no matter what you're trading, if you're trading strong stocks, you're likely going to be in areas of the market that are doing well, because pretty much everything's doing well right now. You do not need this sectors thing. It's more if you just need to cut down your scanning time. I'm running a scan for strong stocks, and more than likely, if a stock is strong, it's going to be from a strong sector. But overall, I don't really filter for sectors. It would only be if I'm really crunched for time and I have 180 stocks on my scan list. Maybe I narrow it down to, these top 3 sectors. And that would just help me reduce the number of stocks I have to go through. Maybe would drop the list to 90 or something like that. So that's how that works. And what I'm doing right now, I'm deploying capital along swing trades. As always, I'm day trading stocks and Forex. If you're interested in that, you can check out these courses. And then also passively investing. I buy some ETFs each month, so you can also check out how that works. So always something going on, because swing trading does have these kind of pockets of activity where right now we're active and I'm trading, but there's been, the last couple months as we were dropping, I wasn't buying anything. So a pocket of inactivity followed by pockets of activity. Not everyone likes that. So, you can incorporate some of these other elements of trading styles, day trading, longer term investing, because they tend to be active at different times, or day trading is active all the time. So that is your weekly stock market outlook for the week of November 27th. Have a great week out there.